Welcome back to the deep dive. You know how we do it here. We find the biggest shifts happening in crypto, break them all the way down, and give you what you need to be ahead of the curve.
And today's topic is a big one. It's really about where professional trading is going to happen next.
It really is. We are talking about the lines blurring between decentralized finance, DeFi, and traditional finance, TradFi. And it's all happening through the hottest sector right now, real-world assets, RWA.
For a long time, RWA was just a concept, right? This idea of putting tokenized treasuries or like real estate on chain. But now it's actually being put to the test at institutional speed.
Exactly. And that's our mission today. We're going to unpack the infrastructure that makes this whole thing work. Specifically, we're looking at a huge upgrade by ApeX protocol. They've basically thrown down the gauntlet to centralized exchanges, to CEXs, by figuring out how to get that institutional grade speed, but fully on-chain.
And this isn't just, a press release. This is a real technical leap. ApeX has integrated Chainlink Data Streams to launch RWA Perpetuals across 5 different blockchains.
5?
Yeah. And that's a game changer because it moves the whole sector past that slow consumer-grade infrastructure that's been holding it back.
So that brings us to the big question, the one that you should be thinking about right now. If performance isn't the problem anymore, is real-world asset trading about to become the next multi-trillion-dollar crypto sector?
Let's get into it. To really get why sub-second data is so important, we have to start with the problem. And the problem is latency.
Right.
Delays.
Especially in professional derivatives trading. We're talking about perpetual futures or perps, contracts that let you bet on the price of something, Bitcoin, oil, whatever, without actually owning it.
And if you're trading perps, you're often using leverage, and things move incredibly fast. So if you're a big market, slippage losses, massive. You think you're getting in at one price, but by the time the order actually goes through, the market's already moved.
You are chasing the market.
You are. And that's why speed is everything. The problem in DeFi has always been the oracle, the thing that brings real-world prices onto the blockchain. Traditional oracles are just slow.
How slow are we talking?
We're looking at data that shows refresh rates anywhere from, say, 30 seconds to several minutes, sometimes even 10 minutes.
10 minutes. That's a lifetime in trading. You can't run a professional trading platform if your price data is old news. That's why DeFi perps could never really compete with, say, Binance or Coinbase on speed.
And that latency is exactly why this ApeX solution is so important. By integrating Chainlink Data Streams, they've completely changed the architecture.
How so?
Well, instead of the blockchain slowly pulling data every few minutes, the streams are constantly pushing information. It's much more like a live feed from a centralized exchange.
Okay, so the numbers on this must be pretty stark then.
They are. A CEX is fast, maybe a 1-second refresh rate. Traditional DeFi oracles, we said, can be hundreds of seconds. But Chainlink Data Streams, they're delivering data in under a second.
So DeFi isn't just catching up anymore. It's actually competing on speed.
Right. And that speed gives traders things they actually need. Faster execution, tighter spreads. But the big one, I think, is the move to liquidity-weighted bid-ask spreads.
Okay, let's pause on that. A liquidity-weighted bid-ask spread. What does that actually mean for the average person trading, and why is it better than just getting a single price?
So a single price, like Bitcoin is $60,000, is too simple. It doesn't tell you how much Bitcoin is actually available to buy or sell at that price.
Right, the market depth.
Exactly. The spread is the gap between what buyers will pay and what sellers will accept.
Right.
By making it liquidity-weighted, ApeX is using Chainlink to pull in data from tons of sources to show a price that reflects the actual volume available. It means big orders are way less likely to cause slippage.
So you're getting the real market conditions, not just a stale snapshot. That's a huge deal. But to deliver that, you need massive trust in your data source.
Which brings us to Chainlink's institutional footprint.
Yeah, the scale here is, well, it's hard to even wrap your head around. Chainlink's total value secured, or TVS, is a staggering $26 trillion in on-chain volume.
26 trillion.
Let that number sink in. That's more than the GDP of most major economies. When ApeX uses Chainlink, they're basically borrowing that credibility instantly.
And it's not just a big number. We're seeing real adoption from huge traditional players.
Yeah.
Swift, MasterCard, UBS. They're all working with Chainlink.
But why would Swift, the system banks used to talk to each other, why would they need a decentralized oracle?
Because if a bank tokenizes, say, a bond on-chain, They need a tamper-proof way to check its real-world price to settle a trade. Chainlink provides that cryptographic proof. That pilot proved that this tech is the backbone for institutional RWA.
Which brings it all back to ApeX. They didn't just add speed, they added reach. They now offer these RWA perps across 5 major chains: Arbitrum, Base, BNB Chain, Ethereum, and Mantle.
And that multi-chain coverage is critical.
Yeah.
But it also directly addresses the #1 fear for any DeFi platform: Oracle exploits.
Oh, we've all seen the headlines: Mango Markets, Synthetics, BZX. These hacks happen because someone found a way to manipulate a slow or centralized price feed.
Exactly. So ApeX's choice here is a direct answer to that history. They needed a solution with proven reliability, sub-second speed, multi-chain coverage, and total transparency. And really, no other Oracle could tick all those boxes.
Okay, so let's get practical. If I'm a trader looking at RWA perpetuals, what does this actually change for me day to day?
It means you can finally trade everything on one platform: crypto, gold, oil, treasuries, all on a single decentralized exchange, and you can trust the price you're seeing is real without that Oracle lag messing with your execution.
This sounds like ApeX is trying to position itself as more than just another crypto exchange. It feels like they're aiming to be the on-chain version of the CME, the Chicago Mercantile Exchange.
That's a powerful comparison. But I guess the critical question is, do they have the regulatory green light or the market depth to really be the CME just yet?
Not yet, no, but the infrastructure is the first step. And they offer one huge thing the CME doesn't: no custodial risk.
Ah, that's the key.
You don't have to deposit your funds and trust them not to disappear. It's the performance of a CEX with the security of DeFi. That's the on-ramp institutions have been waiting for.
And this all fits perfectly into their bigger strategy. They're not just building a product. They're building an ecosystem designed to pull in big capital.
You can see the evidence. They're a major player in the Mantle ecosystem. And Mantle is an L2, which is where we're seeing a lot of institutional money flow because of the lower fees.
On top of that, they're showing commitment with over $8 million in token buybacks. All these moves, plus the Chainlink integration, it all points to one goal: becoming the institutional hub for decentralized derivatives.
So let's zoom out for the final analysis here. This isn't just about one protocol getting faster. This feels like a turning point.
I think so. It's the birth of real institutional-grade DeFi infrastructure. Markets that are decentralized but can actually match a CEX on execution quality.
And it confirms the direction the whole industry is heading. TradFi assets are coming on-chain. The market potential here is just mind-blowing.
We have projections from Boston Consulting Group saying tokenized RWAs could be over $10 trillion by 2030.
$10 trillion!
And CDG is even more bullish. They're projecting over $16 trillion by 2035. And when you realize all those assets, bonds, credit, you name it all, need sub-second manipulation-proof pricing.
You understand why this infrastructure is so foundational. It's what allows pension funds, hedge funds, and banks to finally step in without giving up the performance they need.
It's closing the performance gap, and it's closing it fast.
So as we wrap this up, here's the question we want to leave you with. If the experience truly matched the speed and efficiency of a Coinbase or a Binance, would you confidently trade tokenized stocks or commodities on a decentralized protocol?
The takeaway is clear. That gap between CEX performance and DeFi speed, it's almost gone. And it's thanks to robust, enterprise-grade solutions like Chainlink Data Streams. This is how DeFi grows up.
And if you found this breakdown useful, if you want to keep getting these deep dives, engaging with us really helps. I mean, subscribing, leaving a comment below on what you think about RWA, hitting that notification bell.
It genuinely helps the channel.
It does. It helps us in the algorithm and lets us keep making this kind of content for you every week. Thanks for diving deep with us. We'll catch you on the next one.